So can I have a big round of applause for our panelists? You've already done that. So yesterday, if any of you were in the panels, there was a feeling that, people mentioned that last year when the trade war sort of between America and China started and there was discussions, markets sank and people were feeling a little bit depressed. But since then, everyone's kind of got used to this status quo. We'll leave the politicians to sort it out for themselves. We've got to get on with business. The mood returning? Would you like to start off by giving us a sense of how the mood is at the moment with regard to the economy and investment into the metal space?
Sure. I think the slowdown in the China economy actually started way before the US-China trade war. If you remember, about 2 years ago, the Chinese government has been actively deleveraging the entire economy by draining liquidity from the market. So that affected, I think, the overall economic growth and also the outlook of companies in certain sectors, especially those in the infrastructure, construction related. Fast forward, obviously the US-China trade war came in. I think that actually dampened the sentiment of a lot of the investors and also companies in China. And if you look at the statistic in terms of the China outbound FDI in the last 2 years, obviously that has slowed down. I think over the last decades, for example, you see a very nice trend of outbound investment by Chinese company growing significantly. But over the last 2 years, I think we do see a slight drop, a slight slowdown in terms of the investment. I think there are a couple of reasons. One is obviously like what we mentioned in terms of the outlook, the prospect, there are uncertainties in the market. Investors tend to stay on the wall rather than making the move. I think the other issue is obviously the liquidity in the market. Financing are more difficult to come by. If you're familiar with Chinese company, a lot of these POE and SOEs, when they obtain financing from the policy banks or the Chinese banks, they tend to pledge their shares, their listed shares on the Asian markets to the banks as a collateral. And the moment the share price were to come down, the amount of collateral will be reduced correspondingly, and therefore the financing available will be less for this company to undertake some of these mega projects in the market. So I think a combination of this factor actually affected the slowdown in terms of the outbound investments. But from the data that we have seen in the last 2 years, I think the biggest slowdowns are in the technology sector. This is obviously related to China investment into US and Europe. There are a lot of discussion topics around that. That I think has seen a slight drop-off compared to the rest of the sectors.
Parker, what's your take on the economic situation?
I think that's some, from my perspective, I think of fundamentally, it's more sentimental rather than fundamental. So China economy is still strong. China, what it's doing right now is do the structure change. The supply side change so that to cut off those low efficient or capacity sectors and also try to improve the whole economy structure so can long-sustainable economy growth can be ensured. So that change just happened at the same time when trade war starts, when the deleveraging starts. So all these factors combined together cause a lot of strong negative sentimental. And people worry about a recession, the global recession, economic recession, and cause there's a negative sentiment in the market, so people worry about metal demand, whatever stuff. But we think it's actually a good opportunity to invest. That's why we are setting up a fund and in the process of closing the mining focus fund right now. So the time won't stay longer, so it should be very good timing for investments.
Tell us a little bit about New Prospect Capital and what you're doing with your new fund.
All funds backed by private capital, Asian private capital. And we are in the process of closing a fund with a mining company and targeting on development stage company, our PFS, FS stage mining company worldwide. So we are more focused on the base metals, gold, and EV battery metals. So we are seeing the more demand coming from electric vehicle in the China market and global market. So copper, nickel, and less zinc, something like that would be more interesting for us.
What's the size of the fund, though? What do you
About $200 million right now, but it could be additional amount if the market's good. Yeah.
And your investors are from mainland China, or?
No, we invest overseas.
Right.
The capital is from Asia.
The capital's from Asia.
Including Chinese capital.
Including Chinese capital.
Yeah.
Fantastic. Leo, what's your take from Zhaojin? Obviously, you produce gold from the parent company. In this sort of market of uncertainty, is this a good time to be in the gold space?
Yeah, I fully agree. And first of all, I feel very happy to be here again. And I clearly remember last year, and the original panel discussion finally became an interview on myself. So, but this year I'm happy to see I was not alone this time. So we have other two experienced panelists here. And but on the other side, I think the one-to-one meeting and became warmer than last year. So that means the market, especially in the mining market, became recovering compared with last year. So regarding in terms of Zhaojin mining, and the Zhaojin, of course, maybe the most of the audience is very familiar with Zhaojin mining. We are the number 4 largest gold producer in China, and now we set up a new strategy. We call it double half. That means the first half of annual production is coming from China, and our team is mainly responsible for acquire another half that are roughly 600,000 ounces production from outbound of China. And so, according to our strategy, and we are looking for the right partner, the project all over the world. And in the past few years, actually, we have make some investment happen, including the New Centauri in Australia, because we are focusing on the largest shareholder named Line Selection. It's very famous in Australia, so it's a right partner. And secondly, we formed the funds, and it's a mining investment funds based in Toronto. We have another partner in Toronto in order to leverage the advantage locally. And certainly, we have became the second largest shareholder of Sabina. Sabina owned a very big assets, very quality assets in North Pole, and the 6 gram per ton open pit. And I was dispatched to the board of Sabina.
Right.
Yeah. So next step, we are looking for the bigger deal in the near future.
You invested, was it 63 million in Sabina? What was the?
Totally now has reached 70 million.
Right.
Canadian dollar.
Right. And Sabina's, what are they planning to produce? How many ounces?
The Sabina, based on the current schedule, the Sabina will probably be put into operation within 3 years. The annual production will be 200,000 ounces per year.
So you're still looking for another 400,000 ounces?
Yes, it's a tough task, but we have a bigger dream to realize.
Fantastic. So if you're anyone out there producing 400,000 ounces, you know who to talk to. But your take on the mood in China, you're saying that it's certainly picked up, it's improved. People have got used to the new normal of this slightly difficult relationship between America and China. How much of it is posturing and how much of it is actually affecting them?
Actually, in the past 4 years, I have a deep think about the cross-culture issue. So, especially in the last year, I personally met a lot of successful mining company, a mining tycoon in North America and in Australia. My deep sense is that. So I have a lot of study on how this company became so successful, and in my view, the cross-culture is really critical issue to deal with during the overseas investment, especially for Chinese company, because the Chinese company, if we trace back to last 10 years, since 2008, the Chinese mining companies start to rush into the overseas to acquire the assets. So frankly speaking, actually we have not enough or sufficient experience in the overseas M&A. So, for Zhaojin mining, we still keep learning. We still want to stay in foolish and keep learning from our partner overseas. So that means in this situation, I think the right posture for Chinese company is that we should stay foolish, stay humble to our partner and keep learning from our partner rather than aggressively take over everything and doing everything. Maybe we think we can do everything correctly, but actually it's not correctly.
There is a feeling out there among some people you talk to that that there are Chinese investors who will invest in anything that a smart mine promoter can sort of push their way. Changing. This is not true. Yeah? This is a fallacy that people need to. Parker, you tutted when I said that. So what's your feeling on that?
Yeah, I think Leo just mentioned that the past 10 years has been a learning curve for Chinese investors, but also for the overseas companies as well. Those who has high expectation of Chinese investors will be paying high premium for, and the low quality assets will no longer a thing. People become more sophisticated, more educated, and you can see a lot of deals happen, and failed, and people learn from that stuff. And also, ODR process will take longer, so people become more picky on good assets quality and the deal structure as well. So that time is quite special because a lot of capital piled up for overseas targets. So like Leon said, and people just rush out for assets without thinking too much, but no more. 2 cents, yeah.
I fully agree what Mark says, and I think the Chinese mining investor became smarter than 10 years ago. But I think there's a big potential for us to doing things better in the future.
What does your due diligence process look like?
For us, I think the market that we are more familiar with, which is the Southeast Asian market, a lot of time our approach tends to be supporting the Chinese company which are going out to those markets to either invest in the mine, be it greenfield or brownfield projects. So our approach tends to be following them rather than anything else, rather than trying to look for mining projects to invest on our own, because at the end of the day, we are a fund. We tend to be a generalist rather than a specialist. So the company that we deal with, the sponsors, the Chinese sponsor is going to be more critical. So our due diligence will focus a lot more on the Chinese sponsor itself in terms of their financial capacity, in terms of their operational capability. If they are going into a market and also into a sector that they are already familiar with, they've done well in China, what they need is a financial capital to help them to go along. I think that is the sweet spot for us. Then we will come in to help them to structure a transaction and also bring in our LPs. A lot of them are actually financial institutions to provide the necessary project financings, right? From China Development Bank, from Exim Bank, for example. And the trend, I think, in the last decade or so for Chinese company investing in Southeast Asia has also evolved. In the beginning, I think some of them don't mind taking a minority stake with a view that they're going to learn about the market. Increasingly, I think over the last 4 or 5 years, I would say 70-80% of the companies that we talk to and approach us when they talk about investment into Southeast Asia is about controlling deal, right? They want to control the operations there. They want to own the mine. They don't mind partnering, having a minority shareholder in the local country, in Philippines or Indonesia, that could help them to facilitate, certain approvals or relationship with the local authorities or the local villagers. But at the end of the day, they want to control, because at the end of the day, their investment thesis is that I'm going to export what I have already done well in China into that market. And to do so, I need to be able to have full control over the operation, over the directions of the operations over there. So I think that trend has been rather obvious. If you follow the news, for example, there have been Chinese company trying to bid or trying to do a general offer, right, a takeover of a listed company in Indonesia that is operating a huge cement plant with a quarry. They are ready to go in and take over the entire operation. And their due process, when we look at it, we were asked to explore the financing as well. It's actually very detailed. They are able to go into and say that this is your unit, comprehensive unit cost. If I go in, which are the area that I can reduce it immediately and make it profitable. So I think these are some of the things that I think Chinese companies are already equipped to do that. We are less worried about the asset itself. We are more worried about the sponsor themselves.
Tell us a little bit about China ASEAN Investment Cooperation Fund. You generalist fund, invest in all sorts of things, but only in ASEAN countries?
Yeah. China ASEAN Fund is actually what we call a quasi-sovereign private equity fund that is sponsored by Chinese agencies, state agencies, and also entities, the likes of Exim Bank, CICC, Bank of China, China Communication Construction. We also have IFC as our LPs. It's $1 billion fund. We invest strictly in the ASEAN market, Southeast Asia. So our Fund 1, for example, we have 10 companies in 8 countries in Southeast Asia, heavily tilted towards infrastructure, resources, and utilities. I would say about 70% of our allocations are towards these 3 sectors. And a lot of time, I think our approach is really we want to facilitate this China-ASEAN connectivity. That's our value add. If we find a good assets in Southeast Asia that we can invest into, I think at the back of our mind, we always think about how do we create value? How do we bring the China angle into the picture? How do we introduce strategic partners to them, be it for M&A, be it for capital, be it for business value chain? I think that's where our so-called color of money is. Otherwise, they could have approached any of the private equity fund in Southeast Asia for their transactions.
So you're not just waiting for another Chinese company to go in there and look at the project and then bring you in. You're also going and looking at projects, and then you might think, well, I know a company back home who might be interested in this, and you go and bring them in. You actually source the opportunities.
Yeah, it's both ways. I think we can't afford to be too passive in terms of waiting for Chinese company to approach us. There are certain investment teams that we like. For example, e-commerce logistics is something that I think we are focusing a lot on nowadays. And obviously with that in our mind, we are actually looking for Southeast Asian asset. And we are also trying to line up Chinese partners whom we think can actually add value in the entire investment. So it's both ways. If there are Chinese companies that approach us and fall within our mandate, we are happy to look at that. But we can also actively go out there and look for targets that will fit into these connectivity themes.
Following the comments of Mr. Deng, and I think what Mr. Deng said is a very smart combination between the industrial investor and the financial investor. I think, I fully agree with that. And actually, the Zhaojin Mining is also acting on this model. For example, the Zhaojin has accumulated some of a reputation in the market through closing the deal. I think the closing deal is very important. If you always walk around in the market and then never close the deal, so you will lose your reputation and your trust. But now the Zhaojin has done some deal, and we accumulate some expertise, the expertise of the team, and to do more things. So in this situation, actually we have connecting some sovereignty funds. In China, there's a lot of big funds, but they never trust everybody, because there's too much failure in the past 10 years. But now what we want to do is attract and build up the mutual trust between Zhaojin Mining as a industrial investor and the sovereignty funds, because sovereignty funds want to support the company like Zhaojin Mining. So in this situation, maybe in the future, finally the funds will quit from the project, and the Zhaojin as an industrial operator, industrial investor will acquire this. So this is a very good combination.
What's your due diligence process? How do you look for projects?
Due diligence. I think it's important making the due diligence, but actually in the past 10 years, everybody say a lot of things, a lot of more points on the due diligence as a not very special, not a specific topic. But in my view, the most important things in the due diligence is the jurisdiction. I mean, it's not the project itself, because in the past 10 years, the Chinese mining company, especially the technical team, can make very good judgment on the quality of the project itself. But it's very challenging for them to make a judgment on the jurisdiction. So for Zhaojin mining, we are put more energy in these aspects. So we prefer the company, the target company is listed in Australia or Canadian market, because in that two market, the information is very transparent and very established and very fair, very stable market. And on the other hand, actually in the past 30 years, the Chinese construction company made a lot of mining construction in the third world country. So if the project is located in the third world country, we will be very fantastic to Chinese company, because in this situation we can bring more useful resources like the engineering and the high quality equipment, and to the third world country to increase the economics of the project.
Are you so you like them to be TSX or ASX listed, but you're fairly open-minded about which country you'd go into? Are there any particular countries you prefer, or?
Yeah, we if talking about the location of the project, we prefer the Western African, like the Ghana and Burkina Faso, especially Burkina Faso, just established the diplomatic relations with China in last year. So it's a very emerging country, very attractive country. And as well, the Zhaojin mine actually on a small operation mine in Ecuador. Ecuador is in South America.
Yeah. Absolutely.
And as well, as everybody knows, we are also focusing on the Belt and Road country, like Indonesia, like Cambodia, and.
Yeah, I mean the Belt and Road now, it extends quite a long way. I mean, I know that if you go onto the London Council website, the GLA, the Greater London Authority website, they have a whole section now on Belt and Road, and on London being the sort of end point of the Belt and Road. How far does it extend? What's your take on the Belt and Road investments? What can count as Belt and Road these days?
I think there's a rather wide definitions in terms of what will fall under One Belt, One Road. But essentially, I think I tend to look back and see, what are the two major developmental initiatives that China as a country is embarking on, and see, whether this will fall under the One Belt, One Road. I think the two major initiatives is like what you said. One Belt, One Road is one of them. In China 2025 is basically the other one. Now, in order to fulfill these two major developmental initiatives, obviously a lot of the platform has to be set up. I think companies are being identified to spearhead some of these transactions. So as long as those projects fall within these two areas, and it falls within the definition of China are exporting what they are already doing in China, something that they are already good in, and use that capability or resources to bring it to the countries, I think it can, in general, will fall under the definition of One Belt, One Road. In Southeast Asia, it's less of an issue for us, because I think the activities that we looked at in Southeast Asia, the investments that we look at, tend to, in general, fall within these categories. Infrastructure, for example, there are a lot of the EPC contractors from China. They are going into Malaysia, Indonesia, for example, to undertake the mega infrastructure projects. So those definitely will fall under the categories. The resources side, mining and minerals, for example, in Fund 1, we have 3 investments in the mining and minerals related. One in Indonesia, one in Laos, and the other one in Malaysia. And again, if you look at the underlying thesis of the Chinese company going into this investment, it's basically going back to the area that they are already doing well. Right? One of them is a nickel smelter in Indonesia. The sponsor is one of the largest stainless steel producer in the world. So they are basically going up there, going to Indonesia and Sulawesi to build probably the largest smelting plant. Tsingshan, to build the largest smelter plant that they have ever built overseas. So there's something that I think we are more than happy to support. The other investment in Laos is actually in a potash mine. So as you probably know, fertilizer industry in China is a big industry. Agriculture is a big sector as well. So the demand for potash as a raw material for fertilizer definitely is very key. And obviously, Chinese companies are going out there to look for all these scarce resources. So again, this fall nicely into the what we call the One Belt, One Road definitions.
Definitely. Parker, tell us about your sort of investment criteria for mining projects. Which countries are you looking for? I mean, Leah mentioned Burkina Faso and Ecuador.
Jurisdiction risk is actually a top concern for us. So, but we are more open if we could partner with a local partner or industry-renowned trading house or conglomerate who has been in that country for a while. We will be considering that country risk. As first step, maybe must a very minority stake getting to test the water, and after several successful cases, maybe be more aggressive on that. So we'll be more open for that, on the condition that we can partner with some good one. First, secondly, we in terms of investment criteria, historically Chinese companies like producing assets because there can be earnings or cash flow accretive to the existing portfolio. So Asia market will respond very positively to that acquisition. But now I think Asian market has been underwater for a while, and that strategy might not be working that easily. So we, like a fund, would be more focused on the quality of assets rather than producing or not. So we interested in development stage or PFS, FS stage company because geologically it is de-risked, but operationally it has a lot of upside. So we love that stuff. And given we have connections with Chinese financing institutions, industrial players, and off-takers, we can bring a lot of factors to help the company to deliver their milestone achievements, either through assisting financing or through bringing the Chinese contractor, construction contract, or maybe help negotiating off-taker with Chinese consumers. So that's we will add value after investing company. So.
It was interesting. You have a sort of similar approach to China ASEAN
Yes,
Fund, where you're looking for another partner to go in there together and to get some synergies.
That's for risky countries. For risky countries, we want to partner with some local partner or some globally renowned trading house who has been in that country for a very long time.
Right.
Yeah.
So
for safe country, we don't have to.
Yeah. And what do you consider a safe country? Because in the past, there have been some investments into, say, Australia, which have sort of famously not gone well. How do you, I mean, but then Burkina Faso, maybe you'll have a massively successful investment. How do you judge which countries are safe and which are not?
I think, maybe our investment criteria will change all the time according to the real situation in the market. For example, 1 month ago, I attended a BMO conference held in Miami. I found a lot of, at least number 1 to number 3 gold company in Australia also rushed into the Canada to looking for the project. Right. And as well, recently, everybody have noticed the announcement of Newcrest Mining acquire Red Chris in Canada. So this is a new trend. In my view, maybe there's not a very big potential in Australia market. Maybe we will switch our strategy to the new area like Burkina Faso. Yeah. So this is my view, and it's hard to keep the perfect balance between the which location is good, which location is not good. For example, recently there's some accident happened in New Zealand. New Zealand is a very stable country, but it's still happened something.
Absolutely. Absolutely. Do we have any questions from the audience at this stage? We've got a few minutes left. Anyone have a question? If not, I'm going to ask you, what's your advice for, you're an Australian, you're a Canadian company, you might even be AIM-listed company, you're looking to secure partners in China, maybe offtakes into China. Any advice? Okay.
I think most of the mining company wanted to secure the Chinese off-taker because China is the largest commodity consumer. By securing that, it would be more easy for them to find the financing or find the equity investments. But sometimes it's hard because when the project is in the development stage, it will take a couple of years to get producing. And the time frame is so long that Chinese companies usually cannot make that long-term decision. It's hard for them to make a business plan that earlier. So how do that bridge that gap? I think private equity firms or private capital can help bridging that gap. What we do is, okay, we invest in early stage projects with attractive valuation, with good terms. Okay, we will help you bring in Chinese off-taker later stage when the company is already in close to production stage. That will be better positioned for the company to negotiate terms with Chinese off-taker, but also it's easier for Chinese off-taker to make a business plan within 12 months or 18 months, budget plan. So that's kind of like a thing we're looking at, and we were sure that will play out quite a bit in the future.
Fantastic. Yeah. So they should come and meet someone like New Prospect Capital, and they make you make a small investment into them, and then later down the track as they develop.
Yeah, that's also provide us an exit option. We can transfer shares to Chinese off-taker for them to secure the off-taker by investing in the company.
Yeah. Very interesting. Leo, any advice?
Okay, I have two advice. Firstly, I think it's the right time to make an investment in gold. Okay, because the time is limited, so I don't want to give a very detailed analysis. It's the right time to make investment. If we look at the past 40 years, if you make investment in gold in 1971, you can get the 70.5% yield annually. And secondly, for Chinese mining company, if we want to do more successful investment, we should follow the suit of the mining tycoon. We should have a very strong partner. But before that, we should make the right partner recognize us. So how to do that? So the Chinese company should protect our reputation through make the good deal, close the deal, rather than the walk around and to see. Okay, these are my two suggestions.
Fantastic.
I think at the end of the day, it's a partnership. If you want to bring in, Chinese investors, be it financial or strategic investor, bear in mind the strategic and also the financial objectives of the investors. Some of them could be purely motivated by financial return. Some of them could be more long-term, strategic. So having a good understanding in terms of the background, the culture, and also the strategic objectives of all these investors, I think it's the first step that you must take. Don't take it for granted they are there to just give you the capital and for you to run the operation on your own. Financial investor may do that, but I think some of the operators or some of the companies, corporates in China, they may want to have a certain, long-term strategic partnership with you. So having a clear understanding of that, I think is going to be very useful in terms of your negotiation. The second part is obviously be cognizant that certain things are not similar. For example, I give you a very good example. Investment agreement or any partnership agreement. I think we are very used to a few hundred pages type of agreements, right, in the international market with all the reps and warranty, events or defaults, etc. Some Chinese companies, I think they may not accept that. They may see some of this investment as a partnership. So they have to have a certain level of trust. They may cut down a lot of these so-called T&C inside the agreements. Not that they purposely want to have gray area in terms of the agreement, but it's really their ways of doing things. So you also have to take a step and understand, where they are. Are they really an international player? Is this the first time that they are going out to the market. I think all this will definitely facilitate your partnership with them.
Fantastic. Unfortunately, we have run out of time there, but that's a fascinating insight into the Chinese outbound investment market. You may read in the newspaper that China is slowing down and no investments happening, but we have three panelists here who are testament to the fact that China is open for business. People are feeling buoyant about the mining and metals market and are looking out there looking for investment opportunities. So if you do have something that they may have raised in the panel, please, go and have a chat. Can I have a big round of applause for our wonderful panelists?
Thank you.